Ever dreamt of turning a few $1,000s into a fortune? The stock market beckons with the promise of wealth, a digital casino where fortunes are made and lost daily. It's a high stakes game, but the potential rewards are intoxicating. One lucky bet, one well timed trade, and your life could change forever. But behind the glittering facade lies a complex world of risk and uncertainty. The stock market is a lot like a roller coaster. It's exhilarating and terrifying all at once. Now, you strap yourself in, bracing for the ups and downs. In the stock market, you need to be alert, informed, and ready to react. This isn't a game of chance, it's a game of strategy where knowledge is power. Understanding the forces that move the markets is key to success. But even the savviest investors can get caught off guard. The market is a fickle beast driven by fear and greed. So before you jump in, understand both the potential rewards and the very real risks. The stories are legendary, whispered in hushed tones in the halls of finance. Ordinary people transformed into millionaires, even billionaires overnight. The allure of the stock market lies in its ability to create immense wealth. It's the ultimate embodiment of the American dream, where anyone, regardless of background or education, can strike it rich. Take, for instance, the story of Peter Lynch, a legendary mutual fund manager who turned the Fidelity Magellan Fund into one of the most successful investment vehicles of all time. Lynch, known for his down-to-earth approach and belief in investing in what you know, achieved an average annual return of 29% over his 14-year tenure, turning $1,000 into $28,000. Or consider Warren Buffett, the Oracle of Omaha, whose patient, value-driven investing style has made him one of the wealthiest individuals on the planet. Buffett's company, Berkshire Hathaway, has consistently outperformed the market, proving that slow and steady wins the race. And these success stories, however, are just one side of the coin. For every Peter Lynch or Warren Buffett, there are countless others who lost their shirts chasing quick riches. The stock market is littered with tales of hubris and greed, of fortunes squandered and dreams shattered. And remember the dot-com bubble of the late 1990s? Investors poured money into internet companies with no earnings and even less of a business plan, fueled by hype and the fear of missing out. When the bubble burst, billions of dollars evaporated, leaving countless investors financially ruined. Then came the 2008 financial crisis, triggered by the collapse of the subprime mortgage market. The crisis exposed the fragility of the global financial system, leading to the worst economic downturn since the Great Depression. Millions lost their jobs, homes, and life savings. These events serve as stark reminders that the stock market is not without its perils. Investing in the market involves inherent risks, and even the most experienced investors can experience significant losses. Market volatility, economic downturns, geopolitical events, and even natural disasters can all impact stock prices, leading to unpredictable swings and potential losses. It's a high-stakes game, and it's not for the faint of heart. So, given the potential rewards and inherent risks, is investing in the stock market right for you? The answer, as with most things in life, is not a simple one. It depends on your individual circumstances, risk tolerance, and financial goals. If you're risk averse and can't stomach the thought of losing money, then the stock market may not be the best place, for your hard-earned cash. There are safer investment options available, such as bonds or high-yield savings accounts, which offer lower returns, but also come with lower risk. However, if you're willing to embrace some risk and have a long-term investment horizon, then the stock market can be an excellent way to grow your wealth. Over the long term, the stock market has consistently outperformed other asset classes, providing investors with the potential for significant returns. Investing isn't just about numbers and charts. It's also about understanding human psychology. Fear and greed, the twin engines of the market, drive investor behavior, often leading to irrational decisions. Like when markets are soaring, greed takes over. Investors caught up in the euphoria pile into stocks, driving prices ever higher. This creates a bubble, a situation where asset prices become detached from their underlying value. Eventually the bubble bursts, as it inevitably does, and fear takes over. Investors, panicked by the sudden downturn, rush to sell, sending the market into a tailspin. Understanding these emotional cycles is crucial for making rational investment decisions. When everyone is greedy, be fearful, and when everyone is fearful, be greedy. Entering the world of stock market investing can feel like navigating a complex maze with so many options and strategies. It's easy to get lost. Start small and diversify. Don't put all your eggs in one basket. Spread your investments to reduce risk. Invest for the long term. The stock market is a marathon. Avoid timing the market or chasing quick gains. Focus on solid companies with growth potential. Do your research. Understand the company's business model and financials. Consider index funds for a low cost, diversified investment. Seek professional advice if you're unsure. In the world of investing, patience is a virtue. The stock market is inherently volatile in the short term, but over the long term, it has consistently trended upwards. This is due to the power of compounding, the snowball effect of earning returns on your returns. Think of it this way: when you reinvest your earnings, those earnings start to generate their own earnings. Over time, even small amounts of money can grow exponentially. This is why it's essential to start investing early and to stay invested for the long term, even when the market is going through a rough patch. As Warren Buffett famously said, the stock market is a device for transferring money from the impatient to the patient. So buckle up, stay invested, and let the magic of compounding work its wonders. Investing in the stock market isn't just about making money. It's also about participating in the growth and innovation of the global economy. When you buy a share of stock, you're not just buying a piece of paper, you're buying a small ownership stake in a company. You're becoming part of something bigger than yourself, supporting the businesses and entrepreneurs who are creating jobs, developing new technologies, and solving the world's most pressing problems. Today, investors have the opportunity to align their investments with their values, supporting companies that are committed to sustainability, social responsibility, and ethical business practices. This growing trend of impact investing is changing the face of finance, proving that you can do well while also doing good. The stock market, with its tantalizing promise of wealth and its inherent risks is not for everyone. It's a personal decision, one that requires careful consideration of your financial situation, risk tolerance, and long-term goals. If you're willing to embrace the volatility, do your research, and invest for the long term, the stock market can be a powerful engine for wealth creation. But if you're looking for a get-rich-quick scheme or can't stomach the thought of losing money, then it's best to steer clear. The decision is yours, but remember, knowledge is power. The more you understand about the stock market, the better equipped you'll be to make informed decisions and navigate the exciting, albeit sometimes treacherous, world of investing.